There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliet Sarli.
And I'm Nadine Blaney. It's a pleasure to be here with you all, and you as well, Juliet. It's been a while. But look, when we look at the day that was, it started with the big news that the big deal for Santos had fallen over. So that takeover consortium with the Saudis and private equity have walked away, and that really did dictate what happened sector-wise.
Absolutely. So energy stocks are dragging today. Let's have a look at how the market has finished the day's trade. Down 0.7% there. Similar losses coming through on the ASX 200, and particularly when you look at the energy sector, I mean, it's down something like 6%. And what I thought interesting, Nadine, was that this energy takeover deal being scuppered came at the same time today, if we get to the themes of the day, that the Albanese government committed to cutting Australia's carbon emissions by between 62 to 70% from 2005 levels by 2035. But the Greens group saying, look, this is watered down, not enough.
Well, they've moved to a range, as you can see, rather than a single number, I should say. But yeah, that will take a long time to really play out. Obviously, many companies will be looking to see how it will impact them. What we know is that deal tumbling over did impact Santos, the worst performing stock on the 200, down by close to 12%. But yeah, the energy sector overall down by 6% after that $36 billion takeover fell over. Also, some brokers clearly going back to the drawing board, getting their pencils out. Jarden was the first that I saw coming up with the downgrade off the back of that news.
Yeah, and then of course rate expectations as well, with the jobs market shedding 5,400 workers. And you know, this is a little bit mixed as to whether or not this changes the outlook for rate cuts. I was talking to Paul Brennan from Suncorp when the data first came out. He still thinks maybe only one more cut in potentially November. I noted KPMG saying, look, it doesn't change the dial at all. And IG, so Tony Sycamore, who we have on quite regularly, said, look, it could actually just solidify the likelihood of a November cut. All right, those energy stocks are on your screen now. In fact, if we can go back to potentially some of those sectors that we had, maybe not. We'll just move into the corporate stories of today. So that is where we had Santos, of course, tumbling after ADNOC walked away from that takeover deal.
Yeah, it sure did. Broker Jarden, as I said, moving into underweight. Macquarie reportedly held takeover talks with private equity giant Carlyle Group. The discussions reportedly have fizzled out. That apparently happened, Macquarie looking to take over Carlyle toward the beginning of the year.
Endeavour appointing Woolworths executive Jeanette Fenske to head its BWS liquor chain. She's got something like 20 years experience, including a lot in her home country of South Africa. Shares up 1.25%.
Yeah, so working with Jane Herlika there, and I guess the rest of Bain Consulting. Meyer, I should say, slumps. Morgan Stanley cutting its price target ahead of its results coming through. And we've got industrials under pressure. Brambles down by 1.7%. In fact, Juliet, we didn't get to see the sectors, but 9 out of the 11 sectors are moving lower. A couple bright spots, if you want to call it that. Infotech today and the A-REITs.
Yep, we had those, but we will just tell you what they did. Energy down by about 6%, and as you mentioned, A-REITs higher. All right, let's welcome our guest, Fraser McLeod from Shaw & Partners, to talk about the overall market and potentially a little bit of expensive momentum here. Fraser, is that why we do see the headlines sort of see us get out of some of these positions?
Look at short-term market. Look, it's a pretty horrible valuation, I have to say. So probably on our screen around about a 2% total shareholder return. Market yield maybe a bit above 3, which basically says that we might even see a capital decline over the next 12 months from where valuations currently are. Why is that? Well, it's probably because after reporting season, target prices have stayed put and stock prices have gone a lot higher. So it's hard to pick some real value in today's market.
All right, hard to pick value, but potentially some of the companies we can talk about here, Fraser. One company you think planets are aligning is Silex.
Oh, for sure. I look at Silex. The challenge with Silex is that they've got a uranium enrichment technology, which is highly secret, and so it should be. If it was in the wrong hands, it could be disastrous. But they've got a joint venture with Cameco. They've been working to commercialize and to make sure that on scale the technology can work. Really vital announcement out from them just a couple of days ago. It is looking very, very positive. So for Silex, uranium enrichment trials been a positive result, and that's a significant de-risk for the company. Trump also, he's chasing energy security, especially around key minerals needed for the U.S. economy. So certainly, the planets are aligning, and the stock's going up. It thundered up again today, another 15%. So Fundy's quite keen to buy there.
Okay, let's get to another hot theme in the market, and that is defense. So do you stick in the big end of town, or are you happy, Fraser, to go into the smaller end when it comes to, that really strong thematic that's playing out?
Sure. I think all around the world we're seeing from large caps to mid caps, anyone that's got a bit of a defense dollar, and you see that from on our market, from Aussie or Drone Shield to the big European or US players. All of these, this is not a fashion. This is there's lots of optimism around, and for probably the wrong geopolitical reasons. But you've got stocks like Aussie, who big defense contracts and the potential for massive defense contracts in the future. So there's not a lot of value there in terms of PE, but I think you're really just seeing a massive PE rating. So people are willing to pay up for these for future growth. Yeah.
All right, well, we need to get to the big topic as well. I mean, Santos, in terms of, at least for now, potentially stays in Australia, or what did you think went wrong here?
I think it just took too long. There wasn't really great surprise, Abu Dhabi have abandoned what was nearly a $19 billion bid. The domestic opposition to Santos is originally said, well, it is an Adelaide business and Adelaide-based business, and the domestic opposition is just too hard. There will now be a lot of pressure on Santos to release some value. How they're going to do that, nobody really knows. I mean, the stock is probably quite cheap. It trades about 7% yield. You could park some money there, and the free cash flow is really quite high. But perhaps now Santos would need to get broken up, and they need to split the business between truly what is domestic and what is an internationally facing business that would be a tasty nugget for a multinational energy player. So it's not over forever. But again, it's another disappointment from Santos shareholders who aren't seeing the value that they probably should. But has it been a surprise? Look, to a lot of people here in South Australia, probably not.
Well, let's talk MinRes, shall we? Because, well, what do you say, Fraser? I mean, small gains being seen today. Is there a lot of investor interest as far as your client base for getting back into a company that once, was flying high, but certainly has been low as well?
Sure. If you've got a bit of risk appetite, then a lot of people are now starting to look back into MinRes. It was a brutal year last year for MinRes holders, and almost everything that could go wrong could go wrong. There was a negative story. And this is there's not much science behind this, but now that you see when trucks roll over and the stock price doesn't go down, that's probably an indication that the share price is now tracking back up, and it is. So from a technical point of view, it's the stock is trading with much more positive momentum, but the bad news is not getting worse. And if they can, lithium is still a great challenge, but an iron ore is not. You'd much rather see the share price. It gives them a lot more optionality with the share price heading towards $40 rather than 20. So, but momentum is with it. You just if it was a stock within your portfolio, you need to keep the closest eye on that trade. But for now, I think they're over the worst of it.
All right, Fraser, now we can get to the beautiful photo you've supplied. Talk us through what you were doing at Sharon Partners today, apart from looking at the markets.
we obviously, investing in our communities is really special for us, and today at Jarden Partners we had a row. That means that rather than us all wearing our suits, I've just changed out of my own gym kit, and everyone participated in for many hours in rowing in order to raise money for Gotcha for Life. The purpose behind that is to help Gotcha for Life, which is one of the leading charities helping people through their mental health challenges, and they are one of our key charity partners with the Jarden Partners Foundation. So we all had a bit of fun today, but very, very pleased to report that just today we have raised $100,000 for Gotcha for Life, and super proud of everyone within Jarden Partners who contributed to that. So we're very thankful indeed for our ability to make a difference.
Yeah, absolutely. Really important. Thank you so much, Fraser McLeod from Jarden Partners.
See you soon, Fraser. Wonderful to have you.
All right, cheers. Thank you again.
Look, I think that it's worthwhile pointing out, before we get to our stock of the day, which was, of course, Santos, we have some really great coverage, really great perspectives on this story. So we spoke with Clyde Russell, who's joined us from Thomson Reuters. He's talking about the hiving off of LNG assets, what went wrong, why that bid fell over. Also, Andrew just spoke, our colleague Andrew, of course. I say it like everybody knows him, but... You should. He just spoke with Saul Kavanagh, who is from Credit Suisse, about that Santos deal, what to from here. So you can find those interviews online at ausbiz.com.au, as well as the entire conversation from our guests here on the call about Santos, which was the stock of the day. Anthony Golowenko from MLC and Howard Coleman from Team Invest.
And there's nothing really to recommend it. So I'm not suggesting the company go broke or anything, but if you want 20 companies in your portfolio, or even 25, you don't have to fish as far down as Santos to find one that's likely to be a winner for you.
There is a strong potential there. We do have some risks which fold into our valuation, but all things considered, we own the business, we have a reasonable position. And a little like what's talking earlier about being on the back foot with something like Treasury, we'd be actually adding incrementally to our position.
And again, if you'd like to hear what Howard had to say, you can go to online. At the top of the Ausbiz website, we've got a link to the stock of the day. Speaking of, should we get across some of the big movers today?
Yeah, well, a down day, but let's have a look at some of the stocks that did okay, including Nuix, Catalyst Metals, Boss Energy, of course, was hit hard yesterday, coming back. Paladin was in a halt, I believe, yesterday, so coming out of that up by some 5% today.
Nuix is an interesting one. You can see what a contract win does. It won a multi-year contract in Germany to help them with their data and regulatory capabilities. Need we say more about Santos? Go to the website, get the analysis, make your mind up. Woodside Energy down by 6% in sympathy, even though it actually saw a price target lift by Jarden in contrast to what they did with Santos. Magellan also saw its price target lifted, still down by about 4%. And you can see just the reverberations around the whole energy sector.
Yeah, absolutely worth noting. Oil also weaker. Let's have a look at some of the small end of town, particularly with some of the leaders. So gold looking good again. I had a great chat about some of the gold players and the parabolic moves we've seen with Brian Chu from the Gold Foundation. You can find that online as well. It's going to be in our newsletter too.
Oh, good.
Felix up by 24% today.
The newsletter being the COB. If you don't get it, ask yourself why. You can sign up on our website. And also some of the laggards today in that small to mid cap space. Murray Cod off by 8% and Gorilla Gold Mine. So clearly, rising tide doesn't always lift all boats on the day, off by 6%.
Absolutely not. All right, tonight, more interest rate decisions with the Bank of England rounding things up for a very heavy central bank week. Those weekly jobless claims data that we always get in the US, and a couple of leading indexes as well as FedEx's earnings tonight.
Yeah, often an economic bellwether, FedEx, and it also signals the fact that, quarterlies will be rolling around yet again in the US soon. Tomorrow, what we will see is the trade balance in New Zealand. We've got the BOJ, don't forget BOJ, and we've got Myer earnings as well. So a little look into the retail space, although Myer, you've got to say, is its own sort of microcosm when it comes to retail. Yeah, and we mentioned that broker downgrade from Morgan today, really weighing on it, Morgan Stanley, I should say. All right, we've closed lower by 0.7%. A similar loss coming through on the ASX 200 today. And what are US futures doing after the Fed? US futures are actually higher, and not not insignificantly higher either. So we're watching NASDAQ E-minis up by about 0.5%, S&P 500 E-minis up by 0.4%. Just looking to see if there's any sort of breaking news coming out of the European session. Of course, the US President Donald Trump is there, too much fanfare, meeting with all the royal family. So no doubt there'll be more great pictures coming from there. We've got the Norges Bank as well, navigating a pretty complex rate decision there. And I think a lot of the focus will be on the BOE tonight.
All right, well, that does it for the COB for tonight. And we'll see you from 9:45 a.m. Eastern tomorrow.
It's a Friday.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.